Welcome back, investors, to Ticker Time News. I'm Adam, and Palo Alto Networks continues to impress and deliver strong results in a challenging business climate, demonstrating the resiliency of the cybersecurity market, as well as the company's exceptional execution and technological leadership. For the 11th consecutive quarter, Palo Alto Networks beat top and bottom line estimates as Q1 23 billings of $1.7 billion came in at the high end of its prior guidance. Palo Alto also lifted its forward guidance higher, another common occurrence for the company, forecasting fiscal year 23 EPS of $3.37 to $3.44 and revenue of $6.85 to $6.91 billion. In an environment in which many enterprises are cutting back on spending, including for some IT-related categories, Palo Alto Networks' beat and raise performance shows that cybersecurity is still a priority. During the earnings call, CEO of Palo Alto Networks described the cybersecurity market as resilient, but not completely immune to the macroeconomic headwinds. For instance, he stated that some deals are seeing increased scrutiny and that negotiations around payment terms and discounts are causing deal cycles to extend a little bit longer than usual. When cybersecurity peer Fortinet, ticker symbol FTNT, guided Q4 billings below expectations in early November, the company cited the difficulty of forecasting the timing of larger transactions as the main concern in its outlook. Palo Alto Network is experiencing the same issues and has seen some deals get downsized, but the impact has been manageable as it has dealt with a very few outright cancellations. Furthermore, these changes in the market landscape have largely been mitigated by Palo Alto Network's best-of-breed technology and its operational focus on driving margins and profits higher. The company's next-generation security offerings, including Cortex and Prism Cloud SASE, are a key factor behind its outperformance. These cloud-enabled products crossed the $2 billion annual recurring revenue mark in Q1, increasing by 67% year over year. SASE, or Secure Access Service Edge, now represents Palo Alto Network's largest pipeline, even though the company's bread and butter firewall customer base is more than 15 times larger than its SASE customer base. Broadly speaking, SASE technology combines wide area networking and network security offerings like Zero Trust into a single cloud-based service. On the hardware side of the business, Palo Alto Networks said improvements in the supply chain are providing a boost and should support low double-digit growth in the near term. Palo Alto Networks believes that it gained about 3 percentage points of market share on a year-over-year basis. Although the business has remained healthy, Palo Alto Networks is aware of the macro risk and the changing customer behaviors. Accordingly, the company says that it's more focused on execution and driving incremental operating leverage. Its efforts are paying off as its operating margin expanded by 260 basis points year over year to 20.6%, driven by lowering expenses as a percentage of revenue across all expense lines. For example, sales and marketing as a percent of revenue decreased to 39.3% from 40.6% just a year ago. One concern that popped up is that its billing growth did slow down to 27% from 44% last quarter, and Palo Alto Networks' Q2 guidance calls for a further drop of growth to 20%. In Q2, Palo Alto Networks is lapping strong year-over-year billings growth of 40%, so the decline isn't overly alarming. The bottom line here is that Palo Alto Networks' solid results and outlook highlight its leadership position in a resilient cybersecurity market. Now, on the chart, Palo Alto Network hasn't really gone anywhere in the last 6 months. It's been pretty range-bound. Palo Alto Networks is coming into prior resistance around the $176 a share. This week, the options market is pricing in a plus or minus $5.48 move, placing the upper end of the range at 172 and the lower end of the range at 162. Use these numbers to help you manage your risk when trading Palo Alto Networks this week. Now, Palo Alto Networks is pretty overextended from its 5-day EMA, thanks to a big burst after earnings. Think of this short-term moving average as a circuit board that needs to stay connected to each daily candle on the chart. Now, there is a divergence building with RSI making lower low while price action has made a higher high. Couple that with resistance overhead and a disconnect from its 5-day EMA, and a pullback could be in the cards for Palo Alto Networks in the short term. Now, as you know, knowledge is the key to becoming a better investor or trader, and our goal is to help you stay informed. So do me a favor, click that like button, share this video with a friend, and subscribe to get more awesome financial content, just like this one. And if you like the perspective shared in this video, check out our weekly momentum stocks, weekly expected moves, numerous trade ideas, and a private Discord server, just to name a few of the actionable benefits that other investors and traders just like you are taking advantage of right now. Gain instant access and join us by clicking the first link in the description. Thank you so very much for watching, and I'll see you in the next video.